I thought Thursday market was gonna wreck me,
Me too. The inflation came in harder than expected.
and even the expected CPI was higher than April's actual, which was 4.2%.
I thought the inflation fears would take down the market. I guess that's not the case.
So the S&P just set an all-time high. What industry do you like that still has room to recover?
I actually am looking at cruises, both stocks and taking a vacations. Since we've been working so hard, please send us a like. Is what keeps us going.
Sounds good. Let's talk about CCL. I think it has good room to grow from a technical standpoint.
The meme continue, and this time finally a company that has a decent fundamentals. And the OG meme release earnings, so we will very briefly touch on those too.
Sounds good. Let's jump straight into market update. New high for the S&P 500, just like how we anticipated from last week. And both the Nasdaq and Russell also had a good week, up about 2%.
I have to admit, this is not something I was expecting. But hey, I'm not complaining about it. So I want to dive into Nasdaq chart a little. Historically, in the recent years, every time we see a triple top, the stock pull back a bit, then quickly reverse to test the upper resistance and break up. Historically speaking, I think this is going to run it back with the current triple tops formations. We are likely expecting a pullback to pick up more bulls to break up for another run. In the near term, I don't expect the market to top at this level.
So resistance for the Nasdaq should be around the prior high, which is around 14,050. If Nasdaq does pull back, 13,660 to 13,720 should be effective supports and might be a good buying area if you believe that history will repeat itself.
Exactly. And finally, after being talking about it for weeks, Russell broke out of the box on Tuesday and retested the breakout level at 2,310. Now that level became a nice support. Did you also hear that AMC and GME can potentially move into large cap Russell 1000 from the small cap? How do you feel about that?
Yes, I did, but I don't trade AMC or GME, so that's not really my concern. Okay, I lied. I have $1 worth of AMC in my Robinhood since they offer fractional shares.
I bet you are doing it for their free investor reward popcorn.
Yup, I'm cheap.
Cool story. Back to S&P 500. If we are expecting the Nasdaq to pull back, likely it's gonna drag the S&P down as well. The support is around 4,220 to 4,235. Let's talk about this week's market mover. This Thursday, CPI popped 5% in May, which is more than 4.7% expected from analysts.
So I was confused at market open. Why didn't we see blot everywhere? The consensus before the data release is if the data is higher than expected, the Fed will start considering reducing QE. And if lower, then the market is safe.
I saw a couple of reasons that could explain the market's reactions, which is CPI won't keep rising out of proportions. First, because last May in 2020, the CPI was only zero point 0.1. And from that point on, the CPI has been slowly and steadily climbing. But as your base number grows, even if you grow at the same differences, your percent growth will be smaller and smaller.
I see. From June 2020 to July 2020, the CPI went from zero point 0.1 to zero point 0.6, which is a 500% growth with a zero point 0.5 difference. But from this May to June is only a 20% growth with a zero point 0.8 difference, which is bigger than zero point 0.5. The point being that as the growth slows down, the market is expecting the growth to approach zero and then negative.
Okay, got it. So the market is expecting CPI growth rate to be flat or even negative, which means inflation potentially peak at the current level and will slowly go back down.
In other words, market is already expecting this type of CPI data. And if it's lower than expected,
Then the markets will be on the moon right now. Another reason is 10 years bond yield skinny dipping.
that's right. Big money are loading up on bonds, driving the yields to regional low. Logically, with growing CPI, the bond yields should go up. But since it went even lower, this could be implying that the market believes the CPI has peaked here in May.
Yup, because if the CPI continues to grow, there's no point in putting your money in low yield securities like bonds. You might even lose money due to inflation.
Yup, it seems like the market gave us a pretty clear direction since they are buying bonds anticipating that the inflation growth goes down from here.
Perfect. So the reason gathering from the senators finally decided to not include taxes hike on the infrastructure deals.
That kind of makes sense why some blue chips like Microsoft and Google are hard on Thursday. Isn't dropping the tax hike kind of surprising to you?
Not at all. But now the question is, who's going to pay for this? Not the rich anymore, apparently.
Likely us. But how are tax hike going to affect these companies anyway? The amount of tax being paid by Silicon 6 is 100 billion less than reported in their accounts. They will always find their loopholes.
They are not big companies without finding their loopholes. I can tell you that. Just like memes are not memes without random spikes.
We finally have a meme company that is actually profitable. This week's Wall Street bets found their next target in Wendy's.
Their burgers are never frozen, and their stocks are never heavily shorted as well. Wendy's stock rallied almost 26% to a record high on Tuesday to $29.4.
So, wait a minute. If no shorts, what exactly are people squeezing?
Must be their ketchup and mustard for the burgers.
Okay, all jokes aside, after Tuesday, Wendy's stock dropped 16.5% to $24. So please, if you want to play this kind of stocks, set your stop loss.
Agreed. And this week, GME released earnings, and they smashed the estimated by only posing loss of 45 cents per share versus 84 cents expected, and revenue of 1.28 billions versus 1.16 billions expected.
However, the stock dropped 27% after not providing guidance for the year and filed for a share offering to sell up to 5 million shares from time to time at the market.
Sounds like they are following AMC's footstep. Smart move though. Bad vibes for the investor.
But at least they're making moves on the executive level to show their determination in making changes. They hired several former Amazon executives to lead their operations, technology, and growth, whatever that means for them.
Hey, at least Amazon people knows how to do retail, right? Best luck to your GameStop.
All right, I can give you that. Anyway, let's talk about some more conservative and realistic investing. All right.
I am actually considering cruise companies, unlike airline stocks, which are mostly back to pre-pandemic level. Cruises are still considerably low.
I saw, for example, CCL in 2018, the stock is around $55. And even in December 2019, the price is still around $45.
Which means for around $30, assuming everything progress as we currently in terms of pandemic vaccinations, CCL should at least have 40 to 50% rooms to grow.
Do you know that Carnival, Royal Caribbean, and Norwegian have collectively raised more than 40 billion just to stay afloat this far?
They definitely got beaten up by COVID, but nothing is more important than getting those ships back in the water. And because they raise a lot of funding in the short term, they won't be risking bankruptcy.
The cruise line finally got the quote unquote okay from the CDC to set sail again this summer. This is a pretty big fundamental change, and hopefully they can make some bread back.
That's great news. But I don't see the stock bounce as fast as we expect it to be.
Well, what makes you say that?
Well, look at it this way: return to sailing doesn't mean a return to profitability. It might need a long transition period before they can see green again.
Well, that is true, and passenger demand will be another issue. Every cruise line is required to have their passengers vaccinated before boarding.
Not only that, they will miss out on a good chunk of international passengers.
Also, gathering the workforce and COVID control might be a costly and lengthy process too.
That's true. Not to mention, people still don't want to go back to work right now. So these are all challenges that CCL needs to overcome. I say in the next 3 to 4 quarters, maybe.
Speaking of challenges, Carnival is burning about 530 million on average a month, but they're doing a lot better than the third quarter in 2020, which was around 770 million.
And don't you forget, they are still sitting on about $20 billion debt.
Hmm. Knowing that it is not a long-term hold for me, from the chart, where are you looking to get involved?
Don't get me wrong, they have a lot of depths. But considering both the fundamental improvements and technical we mentioned, right now is an attractive price to get in. Better entry might be around $24. What do you think?
So here's the trend line I'm seeing. My first entry would be as close to the trend line as possible and see the zone I added. CCL has sideways for about 3 months already. Lots of hands exchanged, so the zone is a nice support for me. But I'm also thinking the upward trend line is still in effect, so I plan to add multiple times, and my goal is to keep my cost as close to the bottom of the zone as possible. What do you think about that? And what would be your plan?
Absolutely. I do like the zone being a decent support, but personally, I would like to see a bigger volume traded during the zone. Then it will be a strong support. I think the trend line could be another buying point, but be aware the company earning is on June 29th. If the market doesn't favor the company's performance and forecast, likely that trend line is not going to hold. And if the bottom of the zone can hold, the CCL would likely go to the next zone, which is 19 to 22. So just because you can get CCL near the bottom of the top zone doesn't mean it's guaranteed profit.
Unfortunately. And that's why I'm only opening about a quarter of my intended position, just in case, it keeps going to test the bottom of the zone. And I will load up full position at the bottom of the zone. That way my cost would be roughly a quarter from the bottom to the trend line. Also, I will follow the COVID news closely because if CCL dips to my buy zone, but not because of a good healthy pullback, but rather a CDC suspension due to an outbreak, I would need to reassess my plan due to fundamental changes. Does that make sense?
Well, I was gonna mention that too. I wouldn't go all in and make a massive bet on cruise stock as there's still a lot of uncertainty. But considering this industry has been locked down for longer than any other business, I favor the risk and reward here. It might be able to pay off my cruise tickets for the next couple of years if it goes well.
Yeah, same. But seems like the market isn't pricing the recovery in as much as it does the airlines. And rightfully so, right? Airlines are a must, and cruises, it's not really something you need in your life. But like you, people do need to go on vacation after being locked down for more than a year. And cruises are a popular choice among age groups. So I like the risk and reward as well.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.